Welcome to the Real Estate Investing Failures to Fortunes podcast. I'm your host, Kate Berry, and on this show, we dive deep into the journeys of real estate investors and agents who've turned their failures into fortunes. I'm here today with Angelo Christian of Christian Financial. He is a nationwide lender, and they specialize in both commercial and residential real estate lending all across the country. Angelo, thank you so much for joining us today.
Hey, thank you, Kate. So happy and love to be on. Love the show. I appreciate you for having me on. I'm so excited.
Okay, great. Perfect. Let's get right into it.
Yeah.
I want to learn more about you. How did you get started in real estate? What got you that real estate bug and when? I also love getting context of when you got started and what that market was like.
Yeah. So my story is something from humble beginnings. I grew up very poor in Texas and Houston, struggling for parents that tried to make ends meet. And no one in my family ever owned a home. To drop out of school in the sixth grade to help take care of my family because my father left. And I had four brothers and sisters. I didn't know what I was going to do with my life. Obviously, the thing about America that we all have, that there's an awareness of the wealth gap of people, the higher class, the middle class, the lower class. And I always knew that in my area, you drive around, there's areas called River Oaks or Memorial where all the wealthy rich people live. And you wonder, okay, how do these people afford these gigantic homes? And how did all this happen? And how did they get all this wealth? And I had no one to go to. And back then there wasn't really the internet or cell phones like we have today. So I started reading books. So I started studying success and tried to find my heroes virtually. So I started to read Think and Grow Rich. I fell in love with that book. How to win and influence people. Anthony Robbins, Unlimited Power, obviously Rich Dad, Poor Dad. I just started to really study success. Warren Buffett was a huge instrumental role model for me. Arnold Schwarzenegger, Sylvester Stallone, people that have gone from adversity and totally catapult their life to reach their dreams and skyrocket into the future. So with that, I was able to kind of get somewhat of a perspective on how to change my life from going from living in poverty. And at that same time, I weighed 400 pounds. So I was morbidly obese. And dealing with that at the same time, we were living in our car at one time, how bad it got,
And there was you had 6 people in your family?
Yeah. And my mom was a waitress at Olive Garden. So there wasn't, and we were living in those weekly rentals if we could afford one sometimes, the little hotel motel thing. Life was very tough. So I wanted to, turn my life around. So I got into exercise and fitness, started running, lost all the weight, and then developed a pattern and really studied the people that were doing very well and tried to model that the best I could for my life. And so I went to school, got my education in finance and economics. And so I had a buddy of mine that was in the mortgage business and he was doing very well. I had no idea what a mortgage was. I was 22 years old and was like, well, what's a mortgage? So I didn't know what that was. So I went and worked with him, and it was Ameriquest Mortgage Company at the time. This is in the time of the subprime. This is when the subprime business was booming. So learned about mortgages at that time from Ameriquest and really studied it, got it down. And then obviously we had the huge implosion of 2008. That company shut down. I started my own brokerage. And from there, we grew the business. Now we had to pivot a lot because of obviously everything that was happening at that time, from meltdown of lenders, products. So we added FHA, we got into different market segments. And so from there, we grew our business to what it is today. And now we have 3 different funding divisions. We have our private lending label, our commercial lending, and our residential lending. And the thing that's really helped us to succeed and scale is, we've been very cautious about taking on any type of debt or biting off more that we can chew. And then also constantly adjusting and pivoting with the market or where the opportunity is. A lot of lenders that are in our space, they will only do a few different products or specialize in, let's just say, conventional loans. And our thought is that we want to have a very broad basket, a broad array, and be an expert in all of these products in case somebody they want a hotel, need hotel financing, or they want to buy their, a rental property in Hawaii, or they want to build their dream home. So we have all these products, and that's what's helped to keep us afloat, is to be very diversified. And so that way, when the clients reach out to us or brokers, we have a product to be able to offer them.
Right.
And so that's basically in a nutshell where I came from, the background, and then what we're doing today. So I don't know if that helps to kind of paint a
It
picture.
does. No, it's a great journey. And I wanted to, touch on a few points for those that are listening. If you're listening to this podcast and you are in a similar type of situation of where you started, had lots of adversity, kind of everything working against you, not being in maybe the best, healthiest environment, you still were able to find books, podcast, now, right? There's podcasts,
Or
we can go
now that,
online.
yeah, yeah.
There's so many free resources out there and what I have really learned from those who have used book, I did the same thing. I went right into reading, absorbing as much information as I can, because those that are very successful want to share their secrets. They really do want to show you a game plan, a map of how to get from here to there. It's been done before. You don't have to reinvent the wheel to find something successful. It's just kind of get started. And from your story, it sounds like you went right into finance, economics, dove right into the lending world. I would love to hear a little more about what it was like for you to go through, because a lot of folks listening have heard about 2008, but they didn't live through it. And so what was that like for you to have to be in a company that went under and then start your own?
For me, it was actually a blessing and a relief, because I'm very entrepreneurial, and my type of personality, it's hard for me to work for people. So for me, it was good, because when they shut down, it was basically the impetus for me to go and do my own deal. And I learned a tremendous amount from them. So I was okay with it, because that was my plan from the beginning, was to come in and learn it and then
Nice.
do my own business. Yeah, I'm not really a corporate guy.
Right.
Uh, so I like to do my own thing and steer my own ship. I mean, we all have to work for somebody in the end. I mean, whether it's a customer or whoever, but I wanted to steer my own ship. And, so I was okay mentally, financially to do
Nice.
it. But what I didn't see coming was the implosion. I did not see the banks shutting down. I didn't forecast that. I had no idea. I was a very young kid.
Very few did. I think there was one guy that did.
Yeah. Yeah. Yeah, they made a movie about it, right?
It
So,
did.
but anyway, that was a little scary. We woke up one day and 40 of our lenders shut down, and people that
Wow.
were moving into their house had to get evicted. And so that was a surprise. And then obviously revenues did get affected severely. We probably 70% of our revenues for the following. It took about probably almost 2 years to kind of, until 2010, to kind of, recapitalize, to kind of figure out what we're so. But we always were nimble. We didn't take on a lot of debt and
Yeah.
a lot of obligations, so it allowed us to stay afloat. It wiped out a lot of people in the business.
Right, because everyone was over leveraged, right? Everyone was over, meaning you owing more now on the property. And once the crash happened, property values super declined. And everyone that was lending with this forecast of everything will keep going up and up, now suddenly it was overnight, really found themselves underwater on these properties. And a bit of a different market from today, because I think now we're looking back and so much changed from the lending world. Rules changed, laws changed, lending programs changed drastically to kind of make sure that doesn't happen again. So it sounds like you really did keep yourself nimble enough, and then you adjusted. From what I'm hearing, you adjusted your business model to be adaptable.
Right. Well, we had to. It's either
Yeah.
that or you're going to go out of business, right? The thing is that what I tell entrepreneurs and business owners, or even investors, is cash flow is king. You always have to have a pile of cash to float your business. We never know what's going to happen. Look at COVID. I never thought COVID would happen in our lifetime. So,
Right.
and it's so crazy just looking back. That was 4 years ago or whatever. It seems so surreal. But so cash flow is very important. The thing I would say is that for us, yes, whatever market you're in, doesn't matter, is adjusting and moving with that. Because, like, for example, if we would have just stayed in subprime, we would have gone out of business. We had to shift into FHA, government lending at that time, because that was working. There was
Right.
no subprime after that. Subprime was dead.
It was
So we had to
dead.
do FHA, VA, USDA loan. So yeah, I think that's a very important thing for anyone out there that's watching and they're trying to figure out how to scale or whatever, is just have a lot of market aware. The network that you're in is very, very powerful. The people that you're associating with, make sure that you are around people that are adding value, tremendous amount of knowledge. I think that's extremely critical too.
I was just going to say, I'd love to hear how you built your business from yourself In a
Yeah,
financial crisis, market crisis, building a business. How did that happen?
I was already working at AmeriQuest at the growth of subprime. So at that time, we're able to be very successful and save a lot of money because we were in the boom of it. And at that time, we didn't have really any major obligations. So we're able to save a lot of cash to help us to grow the business and support any type of downfall. So when AmeriQuest shut down, that was the logical and natural thing to do was to do our own, mortgage company. And we
Mhm.
had the resources to do it. We had the team came with me that I was working with there, and we just recreated it.
Great.
And I didn't want to get into anything else. I fell in love with mortgage. And the way that I am, I'm kind of grow where you're planted or addictive
Mhm.
personality where I'll stay in something and work it to the bone. I don't hop around. So I stayed in this. I'm going to do it. I commit. So in my mind, I wasn't going anywhere else. A lot of people got out of mortgage. They got into whatever. So I stayed in it and I wanted to figure out how to make it work.
What is it that you love so much about the mortgage world?
Yeah. So they're obviously number one is helping people accomplish their goal, whether it's a first time buyer or family, or it's a large investor that's buying his 10,000 property, whatever. That's fulfilling to see to get them the capital. And then it's a intellectual, because I'm a numbers guy, it's
Mhm.
intellectually stimulating to me. And from the emotional, the adrenaline rush to get a deal done and work with numbers. And then it's also very rewarding. Like we had just recently, this past month, helped several families close on their home and
Yeah.
seeing the picture, them buying their house, they're moving in, getting their furniture, getting the refrigerator installed. That's what the home is. So it's the apex of everyone. The house is very important for a family. And part of that is instrumental for me.
So getting into it again, is that our podcast is from failures to fortunes. Do you feel was that the most difficult transition you've experienced in real estate, or is there another
No, that was probably the biggest one that I think my life was the biggest challenge.
I want to hear
Because
how's your family doing today? How are you
oh,
doing today?
no, everybody's doing good. I mean, most of my family works with me. I would say that the biggest challenge was my where I came from and what I was able to do with my life and turn it around. And I think that's the moral of the story to the viewers is you don't have to accept your reality. You make your own reality, and everything changes when it changes in the mind. So that's the biggest thing. I'll say that I think that would be inspirational for your followers is wherever you are, that's not where you're going to end up. That's not where you're going to be. Don't look at where you are, look at where you're going and
Yes.
focus on the future. I think that's the biggest takeaway.
And I think really like hearing your story, and I've talked with a lot of real estate folks who went through the financial crisis, and they mark that as the most difficult part of their life. But when you come from a lot of adversity, if you're already coming out of a situation that is one of the hardest things you'll ever go through, you're tough. Like you can get through tough times because you've already seen tough times.
Right.
And it doesn't send you running for the hills because, like you said, you're like, I'm just going to stick this through. I'm just going to keep pushing. And so many people, I think, get into real estate because they think it's going to be easy money, right? It's so, it's just you sell and you make all this tons of money, but it's hard. And a lot
Well,
of times when it starts to get hard, a lot of people leave, right?
right. I agree with you. I agree. You said it right. You're right on the head with that. I think what happens is unfortunately with the way things are in some ways with social media and TV that they have all these property flipping shows and they show these people making all this money and all these things that are out there and they don't and some of them do a good job of showing the trials and the struggles, but I've seen many investors that are extremely upside down or illiquid or just in cash strap situations because they didn't have the right crew, they didn't have the right plan, didn't have the right location, the right
Right.
area. And yeah, you have to be really, really sharp.
And conservative. You can't go in thinking I'm going to make all this upside, so I'll over leverage myself.
Won't work. I
It
agree.
won't work.
When I see a lot of investors, they charge up all their personal credit cards They spend too much on the house when they do a flip and they get stuck and then they can't get out of it. They're
Right.
upset. I see that every day. And then, of course, we see people that are killing it too, but there's a clear difference. I think that's an important thing too for your followers that are first time investors is they should get a mentor or watching your show or guidance to make sure that they are careful.
Or join a company or a team that is doing a lot of volume so that they can like learn by osmosis, work, especially if you're coming into real estate and you're working with clients like in the lending world or the agent world, you can kind of learn through other people because you're putting their deals together for them, you're seeing the outcome, you're seeing the process.
Right.
And so if you're surrounded by folks that have been doing this for a long time, they know what they're doing. So pay attention and
Right.
then you will be able to do your own.
100%. I agree with you. Yeah.
And talking about getting started, or if someone's listening to this and they want to learn how to get into real estate, maybe they're working a different type of job. You know, you guys do lending, but you also do a school. So I'd love to hear
Yeah.
more about the education aspect
Right.
that you provide.
Yeah. Yeah. So that's the other thing that we've built because we've trained a lot of people in this space for loan processing, loan officers, is we have our school called Real Estate University, which is a digital platform. I built it. It took me about 2 years to do. It's over 1,000 hours of content. Is to learn the mortgage industry, the products, the underwriting, the guidelines, the processing, and how to sell. Those are the biggest things that we discuss in the university. And yeah, the idea is you get your diploma and then you can take that to go work for a real estate firm or a mortgage company or whatever, or possibly come work with me. But we have that. It's on our website. Like we have, I don't know if you've all of our social media handles. We have our Angelo Christian Mortgage on YouTube, and then we have our Instagram official Angelo Christian, and then we have our Real Estate University, and then you can just sign up there. And yeah, it's a great. You can log in whenever you want to. It takes about 6 months or so to complete if you're doing it every day, but it's a very powerful tool. Yeah.
That's amazing. And I love that you do provide so much content. And I do think anyone listening, if you're thinking, wow, 6 months is like way too long, I want to start making money tomorrow. My favorite phrase is real estate is it's not get rich quick, it's get rich slow. And you've got to put the time in, you've got to put the legwork in if you really want any true success. Yes, you can have a flash in the pan, do one flip, and maybe you make some money. But how do you keep that going? You have to hit it every time. So you maybe could have a one off lucky moment,
Right.
but we all know that's not sustainable. And you don't want to lose it all in the next deal. So you've got
Right.
to put that time in.
I agree. I agree completely. Yeah.
And so I'd love to hear your thoughts as a lender now and what you've gone through, your whole story. How do you see the market today? And what are you seeing market trends? Where are we in this real estate investing world in terms of lending?
Yeah. So I think this year rates have somewhat trended downward, and there's been an increase in mortgage or real estate loan demand slightly compared to last year. So I think that this is going to be a better year for real estate than last year. More investors have come to the plate with innovative loan products. So you're seeing a lot of private lending that's really emerged.
Yes.
Private lending is, if you guys don't know, is basically where lenders that or investors that come to make loans with more flexible underwriting common sense and different than an agency loan like FHA or Fannie Mae which are great loans, but they have very strict requirements. And sometimes for whatever reason to give it the property or the borrower, they don't fit the box.
Right.
So private lending has really exploded in the last, yeah, because there's situations, especially like just to give you an example, like a lot of people now they're paid via Venmo, Cash App, or whatever, or however they get paid, 1099, and that doesn't work for Fannie Mae.
Right.
So should they not get a loan? No. If they have the money, they should be able to get a loan, right? There's a lot of people that are very successful in many, whatever, Uber, Cash App, whatever they do, and they can make the mortgage payment, but the income that they earn isn't acceptable to FHA. So there's interesting situations like that where private lending makes a lot of sense. and those loans are performing very well. So I think that it's positive, the outlook. I don't think it's going to go gangbusters this year. I think maybe next year might get a lot busier. I mean, have to do with what the Fed does with interest rates and how low they go. I think a healthy mortgage rate around 5 or 6% makes sense.
Yeah.
3% is probably a little unrealistic,
Yeah.
but
I don't know if we'll ever see that again. Do you think we'll ever see that again?
I think it's possible in our lifetime. Who knows? I mean, if you got another 40, 50 years to go, I could see it happening again if something bizarre happens again. I mean,
Sure. So,
yeah,
but there's a lot of folks sitting on the sidelines waiting for it to happen in like the next
no,
couple of years.
yeah, you can't do that. I tell a lot of people, if you did that in 1980 and you waited to buy a house, you missed out on about $1 million of equity.
Yes.
So, you
There
know,
you go.
yeah.
There you
So,
go. The time is going to pass anyway, especially
right,
if you're using leverage, right? And like you saying, talk about cash flow.
right,
So you can analyze a deal, look at what the leverage cost is going to be, and that's another line item in your expenses. And you go back to what is the property generating for you cash flow wise? And you've got to make an educated decision based on your due diligence, but you've got cash flow appreciation, or is that the strategy that you advise a lot of your clients on?
yeah. I mean, if they're targeting rental properties and investment, obviously the one of the challenges right now with higher rates is obviously NOI and
Yeah.
the cap rate. If the thing that what a lot of my clients are doing is trying to either do ground up construction or do value add. So then that way they can create a higher cap rate for that property
Mhm.
or enhancing the property in some way. Because like, yeah, I mean, if an investor is paying 8% interest on a mortgage, there's not really anything left for any money to be made. But if I can add an ADU to the backyard and now I'm charged another grand a month, now I can start figuring out, or if I'm doing short-term rentals, I can quadruple my income. It's causing and pushing people to be innovative and come up with creative ways
Yes.
to extract the value out of the property.
I love that. I love that you've got to be a little creative these days. You've got to be able to think outside the box. It's not like we were talking before we started recording. It is an easier market than it was last year, especially in July 2022 is when the rates started to go up exponentially and they raised them in a very short amount of time. And then all of last year, we're hearing talks about recession. And so there was a lot of people afraid to get in. And also, there's been the gap in affordability and pricing. And so we saw a really stalled market. But now we're starting to see it opening up a little bit more, and folks are getting more of that buyer confidence back. However, we're not seeing those type of pandemic level margins with
Right.
3% interest and 20% appreciation. That is not happening anymore. So you're not going to get the gravy just by ordering that plate. You've got to kind of make it yourself by looking at the deal. Where can you add that cash flow, or where can you reduce those expenses? You mentioned the term NOI and cap rate. Could you go in a little bit about, for someone listening that may not know what that is?
Yeah. So NOI is just, when you're looking at a deal or a property, the net operating income. So N net operating income, OI. And basically what is that? You're looking at the profit and loss of a property. So if it's, bringing in $5,000 a month of income, that's the rental income, that's the top. And then you have expenses that deduct out of that, which is the mortgage, the taxes, the insurance, if there's any maintenance. So when you deduct all of that, you have your net of what you're left over with, and that's your NOI. And so obviously what investors care about is how much cash flow the property's throwing off. And it's probably that's the whole deal of why the reason why you're getting into it. Obviously there's property appreciation, you can
Yeah.
depreciate, so that helps too. But for most lenders, most investors, they want at least a 1-to-1 ratio, right? So that way, if the rent's 5,000, you want your cost basis naturally to be less than that. But some investors will go in, especially right now, with a cost basis that equals 5,000 or
Mhm.
1-to-1. And the plan is to, when rates do drop, to refinance or to improve the property to get that rental rate higher, right?
Right.
Uh, but we're seeing like all over right now, people are doing these ADUs and just, or whatever they can do to maximize square footage to boost revenue.
Yep. And I really like that mindset of kind of going in. It's almost a break-even mindset right now, a little bit, because it is really tight and there's not a ton of margins. I think if you have that, if you have a mindset of, I want to get into real estate to make a quick buck, it's not possible right now, really, in this type of market. I mean, of course, there's flukes, but you can't base a whole business model off of a one-off. And
Right.
so having that skill set, the discipline, and the ability, I think, to think creatively. I love the idea of the ADU, so an accessory dwelling unit. So looking at a property, you're seeing, is there a bigger lot here? What are my zoning laws? Can I add another unit? You've got to kind of start asking these due diligence questions and going down the path of what is possible, and then finding out truthfully what is possible, not what we can imagine, what is actually possible. Do you work with your clients on the strategy of analyzing these deals?
Yeah, we have to. Yeah, because we're
Yeah.
making the loan to them. I mean, one of the things in underwriting is that obviously we have to make sure that the loan will debt service, right? So, I mean, yeah, absolutely. We have to definitely make sure that the deal that they're doing will even work. And because if it doesn't work for the loan, then it wouldn't make sense to them. Most investors, they're not going to do a loan if they're having to come out of pocket to float the note. If their payment's $6,000 a month and they're collecting $5,000, most rational people are not going to do that. So we'll let them know right away, hey, these numbers aren't working, and that does happen sometimes.
And that can be a pretty tough conversation, but it's the responsible conversation, right? Because you're essentially working as a team on this deal. If they're getting into a deal that they're not going to be able to make the payments to you or to the lender, or however they can't float the deal, everyone's going to lose in the end. So
Right.
we kind of have to not have too many emotions going in. You cannot fall in love with the property. You got to fall in love with the numbers.
Right. I agree 100%. You're 100% correct.
And so we're kind of coming to the end of our show here, but I wanted to learn, what are you looking for in the future? Where are you thinking about where you want your company or yourself to head next? How can our community follow back to you and help you in your next step? We want to hear
Yeah.
what's going on.
Yeah. So for us, we just want to grow the business slowly. We're not in a rush, bring in more quality people, salespeople, processing, continue to boost our brand and our value, our goodwill to our customers. That's obviously very important to us. Expand. We're working on expanding our private lending label even more right now.
Right.
So that's the focus for us for the next decade. People, if they ever want to reach out to us, like I said, we're direct nationwide, commercial, residential, private lending. You can call or text our office, 832-431-6331. Or you can check us out on the web, officialangelochristian.com. Or just if you Google, go to our YouTube or TikTok or Instagram handles, Official Angelo Christian. I'm there. We have a ton of content, literally like over 1,600 videos on our YouTube channel. And it's just all there. It's free resources just to educate you and empower you, to give you the knowledge, the information, so you can be better in this business,
Yes. And we all want each other to be better, because if we're all making better deals, putting things together, it helps the kind of the collective real estate industry. We don't want to see people going under. No one wants someone to lose a property. It doesn't help anyone. So I think that's why folks in real estate investing are so open with their knowledge, because we know the knowledge is out there. It's not rocket science. There are pretty simple spreadsheets and formulas to figure out if a deal is going to work. But you've
Right.
got to have that mindset. You've got to have the grit. So you've got to have those long-term goals, reasons why you're doing it. And so also, I think, coming back to your original story, I think anyone listening that maybe is feeling like, I'm not set up, I'm not in a family that has real estate investors, I don't have an education, I dropped out early. Almost everyone I've interviewed did not go to college, and went through some sort of personal adversity in their life. So it's almost, I think it actually is a leg up. I know it maybe can't feel that way in the moment, but you've got the foundation of that grit and the determination to get you through tough times, because if you do, there's so many good rewards on the other side.
Yeah, I agree. 100%. That's the essence of life, right? I mean, why are we here? You got to fight and push and for what you want, what you believe in.
That's right. And all of your contact information is in our show notes.
Of
So
course.
everyone listening, please check out the show notes, give Angelo a follow and check out and go and talk to him. It sounds like
Please.
you've got a product for anybody that's looking to invest commercially or residentially.
Yeah, please do. Please reach out to us. We'd love to hear from you. And thank you so much for letting me be on the show today.
You're welcome. Absolutely. It was a pleasure to have you.
Yeah.
And thank you everyone to listening. This is the Failures to Fortunes podcast. I'm your host, Kate Berry, and we will catch you next time.
Thank you for joining us on another episode of Real Estate Investing Failures to Fortunes podcast. If you enjoyed today's stories and insights, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us. Remember, your journey in real estate is a marathon, not a sprint. Embrace the failures, learn from them, and turn them into your stepping stones to success. I'm Kate Berry, and until next time, keep hustling, stay inspired, and keep turning those failures into fortunes. Happy investing.